Hi everyone, so I'm here with Darren Joseph today, who is a specialist in expat taxation matters. I'm Adam Fayed, I run adamfayed.com, and we are an expat wealth management organization with clients in over 109 different countries.
Adam, it is an honor and a privilege to be speaking with you. My name is Darren Joseph from HUJ.tax. We're a team that seeks to demystify the sometimes confusing world of international tax. So we work with expats, location-independent entrepreneurs, nomads, so described, anyone basically who would describe themselves as a private client exposed to more than one jurisdiction.
One positive of the golden visas is that we spoke before about compliance, right, and being compliant and legal. Say somebody does a golden visa this year, for example. Now, obviously, if rules are retrospectively applied, you can't ever really do anything about that. I guess in general, they're not. But I guess at least the positive, it's the same for business. You know how, like, obviously some big businesses get carve-outs for a certain number of years. I guess the positive, at least, is if you do something as compliant in 2024, 2025, and you've had the proper advice, you've gone through that process, whereas a company like yourself or another, at least you have actually gone through that process of being compliant. As you say, long term, in 2030, are they still going to exist in their present form, or even before that? I guess that's another question. But that is one positive, right? That at least if someone's gone through with a tax advisor, they can say, well, at least I've been compliant with the rules, regardless of whether those rules are going to change, right?
Yeah, generally speaking, they tend not to be retroactive, generally speaking. Although right now with what's going on in the UK, there is some concern about people who have already settled in the UK and did their tax planning with a view for it to be, business as usual for the 7 years until, it begins to get phased out. And suddenly they're looking at a prospect of uncertainty where they wonder if the circumstances under which they move to the UK will be respected. So there is uncertainty in general. I think in terms, again, I see them as being connected. These special immigration categories, basically investment migration, as well as the tax carve-outs. At the OECD level, they do not like the idea of anyone being resident and on a pathway to citizenship without demonstrating real connections to the country. So I think the arrangement that stands out as a good example or case study with a deeper investigation and perhaps replication would be Austria, where it's not just about a fixed sum of money, but it's demonstrating a real contribution to Austria. And then in terms of the tax carve-outs, there is a bit of an apprehension, generally speaking, about a two-tiered tax system. It doesn't sit well politically within the domestic context. So, for example, within Portugal, they've been quite vocal about it being a political football, where, both sides of the aisle were seemingly uncomfortable with it for their own reasons. Because especially as we enter a time of greater economic challenges, one of the first things you look at is the idea of fairness. Well, why must I pay 50%, half my income, when that guy who's presumably wealthier than I am, they're paying next to nothing? So this idea of fairness, and then the politics that would evolve around that, is becoming quite uncomfortable and difficult to justify. So I think, again, they both go hand in hand, and it is going to be a moving target.